What's up, Trash Talkers? What's up, Gruntworks? Here we are on your first Wednesday of the month. If you haven't set your calendars for it, then this might be the first time you're watching it. So let me turn my phone down so that back feed doesn't get all screwed up. But we are here with our sponsor, the Veterans Mortgage Source, specifically with Zach.Farkas. All right, now they give us a good amount of money, so we let them kind of do whatever they want. It's just what we do. But if you go on our website, veterantrashtalk.com, all right, it has links to all of our sponsors. So these guys have all bought in to our mission, and they support us. So let's support them as well. Now, we've said this before. Zach is a loan expert, specifically a VA loan expert. And if you go on to that website and go to Zach Farkas' email, the link is on there. Right away when you get on the page, you'll see it. All right. Send him an email. All right. He's going to let you know if he can help you. All right. Otherwise he's going to get you to somebody that can help you. Now, to combat veteran suicide, everybody always thinks they have the one thing to do it. Now, we keep telling you that you're wrong for that, because there's a system of things that need to, sometimes some people need 3 or 4 things to come into play for them. And then sometimes it is just one thing for somebody. But for the most part, everybody at some point in time in their life is worried about finances. Somebody at some point in time in your life, you start getting pretty stressed out about, can I afford a house? All right. Like, why am I always paying rent? That kind of stuff. And again, when you get stressed out, that triggers that reaction for PTSD. It triggers, a TBI reaction, because remember, your brain heals, but your brain remembers that high stress points. And that's why, you get up there, that memory. So again, if Zach can help you, he's going to help you. And that's why we have this show. All right. We talk about all kinds of financial stuff, goal setting, we've done all that so far. We talked about how to get qualified for a VA loan. So again, say hi, say where you're watching from. If you have any questions, all right, on Gruntworks or VTT, put them in a thread. All right. And we'll get to them. Now, remember, there's probably about a 10-second delay off of what we're saying. And then when we read something, so say hi, ask a question. And then with us today again is Zach Farkas. As you can see, Zach got out as a captain. And if you look in the back, dude got an RCOM. So if you can't trust somebody who didn't get an RCOM, then who can you trust? Zach, welcome to the show.
Yeah, big deal back there. Thanks for having me on, Nick. First of all, I just want to thank Veteran Trash Talk. Great mission. Love your guys' content. Love what you're doing, and really happy to be a sponsor and to support you. I am an Army veteran. I served with Nick, and now I am a VA loan officer. I do other loans, but I prefer to do VA loans because I like working with my people. And like Nick said, over the past couple episodes, we've talked about general qualification stuff, how to improve your credit. And then today we're going to talk about how to qualify for a mortgage. Specifically, we're going to talk about a term called your debt to income ratio. And then I think bear with us for 1 second because we have some slides, and I'm going to talk about what is your debt to income ratio and how that affects your mortgage qualification. So you can use your VA home loan benefit multiple times. If you guys both qualify for the VA home loan, I always say that's double bubble. What I recommend doing is, you can split entitlement. But what I recommend doing is kind of one spouse uses their VA loan on the first purchase, the next spouse uses their VA loan on the second purchase, right? Now, depending on how much you've purchased, you're going to have remaining entitlement. So you guys could combine your remaining entitlement and buy again. If that's not enough, then you could always refinance one of the 2 properties into a conventional product. You could sell one of the 2 properties, okay? And then that's going to free up your VA home loan benefit, and you can use it again. So you can use your VA home loan benefit as many times as you'd like. You just need to free it up or use your remaining entitlement.
Yeah. So what you're saying is they don't, just because they're married, they both have a GI Bill, they don't lose. One of them doesn't lose it, correct?
Nobody loses it. You never lose your VA home loan benefit. You can use it up, and then you just have to sell it or refinance it, right, to free it back up.
Right. So, Chris, where's that guy coming from? Dallas? Minnesota. Well, his name was nice. I should name a kid Dallas. That'd be pretty cool. Are you certified in Minnesota?
I think we're Michigan. I got to check because there's some non-brick and mortar states I can get licensed real quick. But
Dallas, go on our website, veterantrashtalk.com, and then look up Zach's email address on there. The link is on there, and then send him an email, and then
just shoot me an email and I can explain further. Not true. So if you go in the VA handbook, right, there's going to say there's no minimum credit score on the VA loan. Okay. The VA is not loaning you the money. They're guaranteeing you the money. A bank is going to loan you the money. Every bank is going to have different credit overlays, right? So before COVID, my credit minimum was a 550. I know, it sounds low, but I've never had a foreclosure and I have done loans at a 550. Then kind of through COVID, things started to get a little more regulated. Right now, I'm at a 620, but I would imagine that there are certain financial institutions that are back down to like a 580. So you just gotta, depending on where you're at, a 640 is good with me. I can go down to 620, and then if you're in Texas, California, Virginia, or Michigan or Hawaii, I could help you out with that credit score. And I do free credit improvement, so I can help get that up as well. So I'm thinking that it appraised higher than the sales price is the question. And is what they meant. Yeah. So if it appraised higher, yes. However, for a VA loan to refinance a VA loan, you have to wait 210 days. However, now this might be a little bit of a controversial tactic, but if your buyer's agent trusts the listing agent, okay, you could always say you're in contract for 300,000 and the property appraises for 310,000. What I've had people do, and agents that they trust each other, is they disclose, hey, the appraisal came back high. You don't want to share that with the selling agent, right? Unless your agent trusts them. The appraisal came back high. Can we amend the purchase contract from 300,000 to 310,000, and then you give me a $10,000 lender credit, or you give me this, or whatever your agents want to work out? That would be a creative way to get some money there. But if it appraised much higher than your sales price and you want to do like a cash out refinance, you'd have to wait 7 months. You could do a home equity line of credit, okay? Which a home equity line of credit is you just borrow against the equity in your home. So that would be what I recommend, depending on how much higher your property appraised. Absolutely. So zero debt sounds good if you have credit history. If you don't have credit history, which means you probably don't have a credit score, I can do non-traditional credit. So that's when basically I'm going to compile 2 years of rent payments, and 2 years of paying different electricity and utility bills. And I'm going to get what's called a non-traditional credit score, right? So this is if you don't have a score. And then we're going to price your loan at worst case scenario, but you can buy a house. Now, if you have credit history and you just don't have any debt, that just means you're going to qualify for more, which we are going to cover here in very shortly. Yeah, and definitely. And those of you that are watching, if you have any questions, my email address is on the Veteran Trash Talk website, or you can call me at 808-861-0586. I am in Hawaii time, so just please be mindful of that. The phone ringing at 4 a.m. isn't always pleasant. But yeah, any questions you have, I'd be more than happy to help you out. Shoot me an email.
All right, so we're gonna throw some slides up there, Chris, for Zach to talk about. And while Chris is doing that, Zach, we've got another question. It says from Justin Napper. It says, we are dealing with USA now. We've been told to shop, but after running 2 different credit checks, our scores have dropped quite a bit. Would that be, if they worked with you, that wouldn't be a problem, would it?
No, so as long as your credit is pulled within 14 days of the last mortgage pull, your score should not drop. But yeah, I mean, I've never lost in my mortgage lending career to USAA. So I would definitely recommend, I mean, I use them for my checkings and savings. That's about it. They're high on insurance and they're high on the rate. If they had a better rate than me, I'd work at USAA. So, and a lot of, you really want to look for a correspondent lender, which is the model that I am, or a broker to really just kind of blow them out of the water. And then whoever, I forget the name of that person, but if you're located in like Texas or California or Virginia, I guarantee I'm going to beat them by at least a point.
Did you hear that, Justin? Get rid of USAA. All the time, I get pre-approved through USAA, and then I always go to a Veterans Mortgage Source, like every time. Like I'll do that to go shopping a little bit, but then, yeah, these guys will kill USAA. Yeah, so let's go on to the slide. What is debt to income? That's what's up there now.
Oh, it is. Oh, the slide's up?
Yeah.
Okay, cool. So, when you go to get qualified for a mortgage, and we'll talk about the second ratio later, but there's going to be 2 ratios that really are going to determine your qualification. The first ratio is going to be your debt to income ratio. So your debt to income ratio is literally the amount of debt that you have compared to the income that you make. Okay. So there are 2 types of debt to income ratio, and that's going to be front end and back end debt to income ratio. In this example, we have for both examples, for both front end and back end, we're going to say that you make a monthly income of $10,000 for easy math. Okay. Your front end debt to income ratio is going to be your housing only. So if you have a $2,500 mortgage and you compare that to your $10,000 worth of income, right? You're going to have a 25% front end debt to income ratio. Your back end debt to income ratio is going to be your housing debt, right? Plus all of your other debt. So in this example, we have $1,500, say it's in car payments, credit card bills, and student loans, plus a $2,500 mortgage. You compare that to your $10,000 income, right? And then you're going to have a 40% back end or total debt to income ratio. And then can we go to the next slide, please? And then I can't see if the slide, is the slide up? Is the next slide up?
The one that says, yeah, it's up.
Thank you.
Loan products and their DTI ratios.
Yep. So this slide, and you're going to see everything kind of has asterisks on there because it's going to be different banks, different credit score guidelines. But this is just a very basic how the debt to income ratio works. So if you look at a conventional loan, if you see that forward slash, since those numbers are behind the forward slash, we're saying, hey, to qualify for a conventional loan product, your back end debt to income ratio needs to be 43 to 50%. So that means if you make that $10,000 a month, all of your debt, including your housing debt, cannot exceed $4,300 to $5,000. Now, if we move over to the VA loan, which is what we're really concentrated on, the back end on a VA loan is technically not 65%. I've actually gotten loans approved at 72%. They're buying like duplexes and stuff like that. But generally, most investors will not write a mortgage for greater than 65%. I'm in a place that we're kind of straight guide, so I can do some cool stuff. But so this means that, your total monthly debt, if you make $10,000 a month, cannot exceed $6,500. Okay. So the real so what or bottom line up front, which I know I'm bringing this up at the end of your debt to income ratio, right, is there's 2 ways. There's really 3 ways to increase your qualification. The first one would be to make more money because you're going to help out that income side of your debt to income ratio. But, most people, if you could make more money, you would go make more money. The easiest thing to do to qualify for more home is going to be cut down on that debt, because when you cut down on debt, you're going to reduce your debt to income ratio, and you're going to qualify for more home. Okay. The third thing that would kind of lower the monthly payment would be to provide a down payment or a larger down payment. And that's going to reduce your, front end or your housing debt to income ratio. So, very, very easy ratio here. The higher the debt, the less you qualify for, right? The higher the income, the more you qualify for. The lower the debt, the higher you qualify for, and the higher the income, the more you qualify for. Okay, so it sounds like what Dallas is asking is that she has a lot of debt, not a lot of income. So adding her onto a loan is going to affect their debt to income ratio. Dallas, I would say, the first thing you should do, and I can help you with this, is check your remaining entitlement. So it takes me 5 minutes. So you may have enough remaining entitlement to get your next home on your own. If you need to use her entitlement on the loan, you will need to, add her debts and her income to your loan application. So if she is going to negatively affect your loan application, right, then it might make more sense to refinance your current home conventional to free up your loan if your remaining entitlement doesn't do it. Honestly, depending on the state you're in, I would just, after this, just reach out to me and I'll go over your guys' situation one-on-one. I'll pull your remaining entitlement and let you know kind of my 2 cents on it.
Yeah. Hey, Zach, another guy on here says, no.
Oh, perfect.
Nice. And we got another guy named Vince. Welcome. Thanks for watching, Vince. And he says, I'm getting ready to do a cash out refi. That's why I'm here. You do those as well, don't you?
Yep. And it's a really good time to do cash out refinances. The one thing I'll say is before you do your cash out refinance, appraisers, it's going to be subject to an appraisal and how much you can take out compared to the appraised value. Appraisers on refinances are always going to be more conservative. So you may talk to your realtor and they may be like, hey, your house is going to be worth 400. I would expect kind of a worst case scenario for your appraisal. So just make sure you're accounting for that. I do cash out refinances, and now is a great time because the median sales price of homes in the United States has gone up 18% in a year. Interest rates are still very low. So it is a great time to, cash out on your equity and get, use that to either pay off some debt or for other investments.
Yeah, nice. So go ahead and just email Zach, and then he'll get you all those answers. Now, a Christian Gonzalez saying, I have 14,000 student loan outstanding. I should pay that down rather than saving for a down payment, correct? Like, this sounds like somebody who really needs a class on the VA loan, which is not, it's a good thing that you're here, but like, you don't have to down payment on a VA loan. So
yeah, I would actually, it's such a case by case basis, right? Because if that $14,000 in student debts equates to $50 a month payment, right? I would recommend just paying it off over time because you don't need a down payment for a VA loan. But if those, if you need to qualify, it really would depend on your monthly payment, right? Because that debt to income ratio is going to be based off of your monthly payment. So if your monthly payment on a $14,000 student loan is like $500, that's going to affect your qualification about $100,000. Might make sense to pay it off. I'd imagine on $14,000, your payment's not going to be higher than $200. So that's going to be if it was $200, that'll affect your qualification negatively about $40,000. So, the one thing I say is regardless of where you're at with, you're going to buy a home in a year, 6 months, 3 months, I always recommend talking to a mortgage lender and seeing what you qualify for because they're going to help you take the right steps for your scenario to qualify for more or to suit you. I hate when people are afraid to get their credit pulled, because number one, like I'm gonna help you increase your credit, and then number two, like it's kind of like an X-ray. Like you need to see what is going on underneath the hood before you do surgery. So I would recommend to that person, just talk to a mortgage lender, talk to me. We'll see what you qualify for, and then we'll see what effect your student loan actually has on your qualification.
Hey, Zach, give us your email address again. ZACH.
Yep. Period. FARKAS at VMS. So Victor Mike Sierra loans.com.
That's how he got his Archon, with being able to get an EIB with the phonetic alphabet. That was good.
Yeah. Zach, ZACH, period, Farkas, F as in Foxtrot, ARKAS as in Sierra, at VMS, that's Victor Mike Sierra loans.com.
Now remember, everybody watching, Zach spent like 6 months in Ranger school, so he's a tough guy, and he'll be able to work through any troubles you have. So
yeah. You like that alphabetical spelling there, or whatever the heck.
Yeah, phonetic, the phonetic alphabet.
Yeah, phonetic. There we go.
Well, all right. Is there anything else Christian, just make sure that you email Zach. Trust me, you'll be happy. I call Zach all the time asking him, hey, should I do this? Can I do that? And he couldn't even help me in Texas because he wasn't certified yet. He is now. But like,
yeah, actually, we probably got to look at that.
Yeah.
Yeah.
Yeah. So like, I always ask him, I'm like, hey, is this good? Hey, can I do that? Should I do that? And he tells me. So just email him, and he's going to hook you up.
When's a good time? Because we got to do your stuff, right?
Yeah.
Okay.
I gotta get out of. Here's another. We'll end with this one because we gotta get down to the baseball game.
I'm gonna call you tomorrow though, for sure.
Yeah. You gotta get out of the VA loan eventually, so you can build your Donald Trump estate status, right? So you want one property, turn into a rental property, get out of that VA loan, use your VA loan again. Once you get some equity in it, get out of that VA loan and use it again. So That's what I'm looking at doing with my property in Texas, is getting out of the VA loan and then using the VA loan for another one.
And I can't emphasize that enough. People are, I feel like everybody's always trying to cut corners, and I'll have people, when it comes to they come to refi, and the VA rates are always going to be about 0.5% better than conventional. They say, hey, I'm looking to do the VA IRRRL. I want to refi and lower my rate. I said, right now, especially right now, because equity has gone up so much, or homes have appreciated, right now, you really want to refinance conventional. So you free up your VA loan, so you are free to make decisions in the future. Correct. So what happens is, I tell all these people, they come, I did their loan a year ago or 6 months ago or 2 years ago. Hey, I want to refi VA. I say, hey, I think we should really bite the bullet, pay the higher interest rate, go conventional, free up that VA loan. Now I'm gonna get the lower interest rate. Well, like clockwork, 6 months later, they find a house they love and they want to get, and they did not refi out of their VA. Now we have to do an investor loan, which is so much higher than owner-occ, right? We have to do this really, really shitty loan now to get you out of your VA. And, you should have just kind of split. When you can refi conventional, you do it because it gives you the freedom to buy again, and you want to just keep buying. I mean,
you guys hear that? Yeah, we'll end on that. Let's say it slow again. Get out of the VA loan so that you can get more out of the VA loan as soon as you can. Obviously, and Zach's not going to lie to you, so I'm going to talk to him tomorrow and do that exactly. So, other than that, Zach, thanks for coming on and sharing your knowledge. And everybody that had questions, that was awesome. That was the most interactive one. So you can tell people are starting to like this series, as Chris calls it. But we'll see you guys on Friday for the UFC and NFL pick'em. I need to redeem myself. I went -1 on my locks this week, so that was my first loss of the week, the season. So I'm 3-1 on the gambling week. So it's still making money. So we'll see you Friday for UFC and NFL pick'em. Zach, again, appreciate having you on. Zach.farkas at vmsloans.com. And go on our website, veterantrashtalk.com. His link is on there as well, in case you forgot. So we'll see you guys on Friday.